Hey, what's going on, everybody? It's your boy Sal, the Small Cap Millionaire. Please visit thesmallcapmillionaire.com and sign up to my newsletter. If you haven't already, if this is your first time watching me, please click the subscribe button and subscribe to my channel. Today I'm talking about ticker symbol HMNY, Helios and Matheson Analytics. This is a company that recently really took off. This stock really went to Pluto over the merger between a similar company called Zone Technologies. The stock literally went from nothing to, the hottest, or I would say the most talked about stock, really over the last 5 or 6 days. And I'm going to show you guys why here. As you can see, with my chart here, and I'm using eTrade Pro, very, very excellent platform, by the way. When the news of the merger came out, obviously it exploded, really out of the gate. It was just, people just snatched them up as much as they can. A lot of people made a lot of money, but like all news, eventually, things do fade, and there was, significant fading action throughout the day. But here's the thing, is that there are a lot of people on the first day of great news who don't hear about the stock, and they end up finding out about it after they come home from work, and they see this stock that was up 300, 400, if I believe, almost 600%. Actually, no, I want to say it was about 300% on the day. So obviously, when they are at home from work, they set their, brokers to buy the stock the very next day. So as they go off to work at 9:30, all of these orders rush in because these people are so excited about this company that was, you know, going to the moon yesterday. So that really explains this. So when good news happens, you got to understand that not everybody's going to hear it. So 9 times out of 10, you're going to get another bounce or another opportunity to play the very next day. Okay. So if you are a shorter here, and I'm sure I can almost promise you, there are people who had to buy it back, and which is also responsible for a lot of this driving up action too. A lot of people buying back. There was a decline, and look, it kept going up. I mean, there were a lot of people who were excited, and excitement in itself is a completely thing, a completely, you know, its own kind of thing you got to study. There's a book by Alexander Elder, really great book. If I can look that up right now, really, really great book. Let me see if I can look that up. It's only actually on Amazon. And excellent, excellent book. And he talks about the psychology of investing. And I want to say, I want to say it's a random walk on Wall Street, but I don't think so. I read it for Come Into My Trading Room. There we go. Come Into My Trading Room. He also wrote Trading for a Living too. But Come Into My Trading Room is a really great book because he talks about really understanding the psychology of trading. And, of course, he talks about trading analysis and but basically he does delve into, the psychology of being a trader and trading from home and how, excitement can get out of hand sometimes. And that was kind of what happened with this particular stock. But as I said before, all news eventually becomes old news. And as we can see here, the stock is slowly fading into what I believe is really kind of the be all end all price of about 1157, 1156. I think if it goes below that, I think you're pretty much done. Now, if you're a fan of Tim Sykes, and many of you guys who watch me are, you also have to take note that Tim says a great thing to short is a stock that's been down 2 days straight. I can't remember the DVD he says that, but he does say that a stock that has been down 2 days straight is a great short. Okay? And and the stock has been, as of today, the 16th, this stock has been down. Actually, sorry, today's the 17th, right? 17th, excuse me. This stock has been down 2 days straight. It's been down 2 days straight. So for all the Tim Sykes and many thousands of Tim Sykes fans, we're going to expect that this stock to be hammered tomorrow. If I'm an investor in HMNY. The question I'm asking myself is, why do I have, what's the reason for staying in at this point? What's the reason to stay in at this point? Is this a $12 company? You know, what's the justification? Now, if you're in at $10, just take your profits and go home. I mean, what's the excuse of staying in longer? Just to watch your gains fade away. If you're already at a loss, I would just take my losses and run at this time. And I'm going to explain to you why. Okay, so if we go back, another powerful tool I want to introduce to you guys is Yahoo Finance. Those of you guys who don't know about Yahoo Finance, very powerful website. Tim Sykes uses this website, and he introduced it in the first of his many DVDs, Penny Stocking. I want to say it was part deux. But if we go and look at the historical prices, and I'm not just go in Yahoo, whatever, just put in your tick, or historical prices is a really great tool as well, because I like historical prices, because instead of having to look for the chart, I can actually look at the numbers of any stock, pretty much any stock, and see whether or not these things run and how much they run and how far they run and the volume associated with that run. If we look at HMNY, we can see, which is incredibly stunning, on Friday, the June the 3rd, the week just before the huge merger, this stock wasn't even traded, folks. This stock was practically dead. And it had been dead for many days in May, couple days, several days in May. The stock wasn't even traded. I mean, this is how hard it is to sometimes be a trader, because you just don't know. And you can never count out these stocks that are not moving, that have no action. You can't just look at that and say, okay, this is nothing. Because obviously, I understand the tail of the tape says nothing's going on. But, when things like this happen, it's like, why didn't I see that? Why didn't I see that? But, how could you have seen it? How could you have seen it? That's the real question. So in the end, you're left with a situation where you just gotta have to learn how to play, um, you know, play the chart as it rises up and down. Play the volatility and volatility and the liquidity when it comes in. And that's what many people decided to do. On June 6th, of course, the news came out. Insane amount of volume. The stock had never in its history seen that kind of volume before. And this is again, I've gone as far back as as March of 2016. No further than that is really important. But I doubt at any time before in the stock's history that it ever seen that much volume. The very next day, as I told you before, when people come home, they see that rise, they want to be a part of that. Huge day, huge day. When you come out the gate 300%, let me tell you something, folks. People who didn't know anything about the company, don't know anything about the company, they could care less what's really going on. They just want to be a part of something that's going crazy, and they're going to buy that stock. They're going to go to their platform, set their orders, and forget about it. And that's exactly what happened here for the next day at 15 million shares. And I said, as old news, new news always become old news. And as we can see, a gradual decline in volume. And as the gradual decline happens, we also see a decline in price. Okay, because that makes sense. Okay, less people coming in, less people want to buy, sellers having to sell at lower prices in order to get out. What was really stunning is that the lowest day of volume we had here a couple days ago, 3 days ago, June 14th, which really shocked a lot of people. It scared a lot of people because the volume was so low. Okay, and it was the lowest day for the stock in the last pretty much week. All right, for the week. Okay, we bounced back June 15th. which was really interesting because the company didn't put out any significant news, if I'm correct. The company did not put out any significant news. What is that, June 15th? Let's go back here. Um, yeah, there was no significant news, as we can see in the headlines here. There was no real significant news on June 15th. So I can't explain why there was such, a huge next day. This is almost, 10 times the volume the very next day, which drove up the price. The 16th, we were down significantly. Yesterday, almost $1 a share. Obviously, again, low volume, fewer buyers, sellers needing to get out. They've got to sell their shares at a cheaper price. But here's the real danger sign for this stock, and this is why it's going to continue to go low. All right. Not only besides the fact that people who support Tim Sykes and whether they're on those strategies are going to eat you alive if you still invest in the company, but I want you to see something here. 207,698 shares were traded of this stock today. This is the lowest amount traded since the merger. This was the lowest amount traded since the merger. Now, the decline wasn't very much. The decline was not very much. It is my opinion that I feel that sellers weren't looking to dump today, but more importantly, there weren't many buyers today. There weren't many buyers today. That's a very dangerous sign right there. Volume is going down. Volume is going down. Now, obviously, like I said, new news becomes old news. But if we can't find a consistent floor for volume, price has to come down, right? Price has to come down because now I've got people in the stock who, let's be honest, many of them are traders. They're not long-term investors. They want to make a profit and get out. And many of those people aren't necessarily the most educated of investors. They came late. Many of them are already in a negative situation. And that, in my opinion, also explains why many of them didn't sell today. So that's why I feel the next coming few days are going to be very dangerous for people who are going to be foolish enough to want to buy into this. Because I think you've got a lot of people in there who've already lost some money and they think that somehow they're going to get another one of these days here. They think they're going to get another one of these days. See that? 237 to 2 million. They think they're going to get another $2 million, 2 million share day, traded day, and maybe they'll be able to get out, but I don't see it coming. I don't see it coming. It's your boy Sal. I hope you learned something today. I hope I introduced you to a new tool, Yahoo Historical Prices. Really great way to look at how volume interacts with price. Okay, it's also a really great way to look at also OTC stocks and see, how they run, how volume interacts with the stock as well. So this is a really good tool to use for those over-the-counter issues. All right, so again, if you haven't subscribed, please click subscribe. Um, check out Come Into My Trading Room by Alexander Elder. Great book. You should always be reading. All right, you should always be reading, guys. You should always be learning. If this is something you want to do for a living, you should always be learning. Okay. Uh, Again, subscribe. Go to my website, The Small Cap Millionaire. Sign up for my newsletter. For those of you guys who don't have a lot of money, look into incorporating, build some business credit. I have if your personal credit is jacked up, you're going to be limited in the quality of business credit you can get. So go get my credit repair kit. It's only 10 bucks. All right. It's letters that I've created myself, and I've also scoured from all over the internet that I've used to repair my own situation. Okay. I got rid of student loans, all type of just crap off my credit report using my letters. Okay. Um, Getting a phone call here. So it's your boy Sal. Have a good night, everyone.